Well, the September jobs number missing the estimates. We're seeing, in fact, the slowest job growth since May. And the unemployment rate, though, did tick up slightly more as people are starting to look for jobs again. To John Layfield and Danielle DiMartino booth on the follow-up from all of this. John, let me start with you. I'm sure a mixed reaction, and I'm not sure we can even grade or what's happened in the market thus far. But overall, as a reflection of the economy and the impact on the stock market.
Yeah, this singular jobs number, Charles, is pretty much a non-event. It was not good, it was not bad, it was just kind of in the middle, as a lot of these jobs numbers have been lately. But the trend is what is worrisome. This is the 10th straight year we've had less than 3% GDP growth. That's the lowest we've ever had since we've been measuring GDP. We're about the same number of jobs, 121 million, that we were full-time jobs since about 2008. So the jobs that have been added have been part-time jobs, have not been as good. There's no other way to explain, with 5% unemployment, having 1.4% GDP. So the trend is not good. This single jobs number, I don't think either candidate's going to be able to latch onto this either way to their side.
Well, believe me, they both will have some talking points one way or another. But, you know, Danielle, essentially what John was saying is that to a degree, Wall Street's viewing this maybe as a Goldilocks number, even though the market's down. How does the Fed view it? Does it change anything?
No, you know, Charles, the data that came out this morning gave a whole new meaning to mixed. There was some good, there was some bad. I prefer to look at some of the other forward-looking indicators that we're seeing right now in the job market. Some fresh data out of small business owners shows that we've seen the largest drop in years in the number of job openings among small business owners, and that typically tends to portend a tipping point, an inflection point in the economy. So looking ahead, these are some of the things that worry me. And again, I think it's a reflection of what's been spoken about just now, how very anemic the recovery is, and the fact that it looks like it's actually slowing down from something that's already got a 1-point-something handle for GDP growth.
Well, Danielle, what do you make of the 23,000, a big jump in temp jobs? Historically, employers hire temps, and then if things work out, they make them permanent. Does that no longer apply?
You know, I'm not sure that it no longer applies, Charles, but I would temper any enthusiasm when it comes to temporary job creation, because so many business owners have turned to temps because they don't want to deal with the extreme expense and increasing expense, thanks to regulations, of bringing full-time workers on. It's become increasingly difficult in this environment for employers to commit to bringing on full-time employees, and one of the solutions is temporary workers. So it's not the great job that it was 10 years ago. I
got you. John, the market's sort of spinning its wheels in a real dedicated trading pattern, but we know it won't stay here forever. What do you think moves the market decisively one way or the other?
I think the Fed still, Charles. I think people are waiting until December to see what happens. The Fed saying they're not political is that's a massive stretch, if not even worse than that. They're waiting until after the election. It's not either for Hillary Clinton or Donald Trump. I think it's just waiting until after the election. So they say they're not involved in politics. The next president's going to have to deal with about 2 percentage points rate hikes by 2018. That's going to, I think, really hurt the stock market. And so I think most of people that are investing are waiting until December to see if they're going to raise rates and at what pace they're going to raise those rates.
Right. Although, you know, Danielle, and I've got to ask you this, there seems to be a major disconnect within that Fed umbrella, because you got all these FOMC members, including a couple doves who are talking hawkish, voting hawkish, and yet you've got the Atlanta Fed that has now modeled the GDP down to 2.2% and from almost 4% for the third quarter, and that was before this number. They'll probably go even lower. So how come the Atlanta Fed sees the third quarter so weak and anemic, and yet the FOMC is saying we've got to raise rates?
You know, Charles, you're talking about the most dovish people over the last few days. Charlie Evans in Chicago he's a notorious dove, and he's coming out and sounding hawkish. It makes you kind of believe that the Fed has got a different agenda here. Maybe they see recession looking over the horizon. Maybe they are beginning to acknowledge that unconventional monetary policy really isn't all that it's cracked up to be, and that they simply don't have enough in the way of higher interest rates to combat a recession. Maybe it's a fear factor that we're seeing playing out here with all this hawkish talk coming out of the Fed.
Well, you've got deflationary forces in food prices. Wages are going up, but you know, nothing gangbusters, you know, what we will call inflation 101, too much money chasing too few goods. So we're nowhere near that. And so I just don't necessarily get it. I really don't. I understand, to John's point, that there's obviously some politics involved in it. But from a pure economic point of view, I'm not sure, Danielle, why they would have to hike rates anytime soon.
They wouldn't have to hike rates. In fact, right now, everything that the Fed's models are telling them is that they need to be easing economic conditions, that they need to be lowering interest rates. But that's kind of a conundrum for Fed officials to face, because there's nothing to lower from here. What are they going to do? Bring us back to the zero bound, which also proved ineffectual.
John?
Charles, you know, we're acting like this Fed has this agenda that they're trying to get toward. Maybe they don't have an agenda. Maybe they just don't know what the hell they're doing. I think that's the case.
Hey, listen, my man, I'm with you. I'm with you. I mean, they're like a rudderless ship.
John, I think that we know for sure that there are at least a few members on the FOMC who definitely have an agenda. And then we'll go back to your theory for the remainder of them, maybe, that don't know what they're doing. It's a bad combination, no matter how you slice it.
Daniel, I don't doubt they might have a political agenda, but I'm just not sure they have an agenda for the economy. They're out of bullets. They missed their window 18 months ago to raise rates, and now you have the Boston Fed head talking about, hey, we might want to raise rates because you have wage pressure going up. Can you imagine, with wages down since 1999, they're saying, hey, we want to make sure that the middle class doesn't make more money?
Look,
I just don't think they know what they're doing.
Trust me, John, I was on the inside and arguing that those 18 and 24 months ago, when the labor market was gaining momentum, that they shouldn't be arguing about tapering Fed purchases. They should be raising interest rates. Well, you know, the train pulled out of the station a long time ago.
Guys, I think I do have one solution. You know, when my daughter was in preschool, they used to take all the kids out. They would tie them up by the waist and take them on a field trip. So maybe we can bring all these guys out of the ivory towers, tie them up one day, and walk them through Main Street. All right, thanks a lot. Have a great weekend, John. I'm still jealous, man.
Thanks.
Out in Bermuda.
Thanks, Charles.